Well, now that we've written the financial plan and had all kinds of fun doing that, then the next step is to go into investing. In particular, socially responsible investing. This is what we do at Butfield and Associates. Now, a lot of people first say, well, what is socially responsible investing? Well, by definition, and this comes from Steve Sheath, he's the president of First Affirmative Financial Network, which is a third-party money manager, one I happen to use. The process, a definition of socially responsible investing is, quote, the process of integrating personal values, societal concerns, and or institutional mission into investment decision making. Okay. Now, basically SRI, as we call it, is a three-legged stool. The stools are screening different companies in and out of investment portfolios, shareholder advocacy, and community investing. I'll say a little bit about each. Screening is the overlay of qualitative analysis on top of quantitative analysis. We're looking at a company from a financial point of view and how well it's going to do, but we also want to look at what's the qualitative nature of the company. How are they impacting the world? How are they impacting their customers? There's what we call the double bottom line, this qualitative and quantitative. The analysis offers the ability to select companies that are aligned with investor values and at the same time produce acceptable returns. Okay. Now, screening can be both positive and negative. For example, positive screens might be including alternative energy, pro-women's rights, equal hiring practices, things like that. Negative screens means we might screen out big tobacco, major oil companies, weapons manufacturers, things like this. We screen in what we want, we screen out what we don't want. The second leg of the stool is shareholder advocacy. This is when groups of shareholders will actually take resolutions to the board of a company. Now, the first step is to engage in a respectful dialogue with executives of the company for the change that we want to see. Sometimes that works and sometimes it doesn't work. So then the next step is to submit a proxy for voting by the board at the board of directors meetings. You have to own the company to be able to do that. So sometimes a socially responsible investment might not look like SRI because the mutual fund we own, for example, wants to own that company so as to affect a positive change with that company. And they can't do it unless they own the shares. Okay. The goal is to improve financial performance over time and enhance the well-being of all stakeholders. Stakeholders would not only be the owners of the company, they'd be the employees, vendors that deal with the company, the environment, the marketplace in general, and so on, as well as shareholders of the company. The third stool is what we call community investing. And this is basically allows capital money to get into low-income communities. These are folks that just don't have access to money to do the things that you and I might be able to do. Very underprivileged. Investors can direct a percentage, 1%'s good, 2%, whatever you're comfortable with, into special types of banks in these communities that make a difference. It's what we call Community Development Financial Institutions, CDFI is the acronym. Now, why do this? Well, we alleviate poverty, provides jobs, provides affordable housing, and finance small business operations. And these are for people that wouldn't have access to this any other way. Now, these three complementary strategies allow an investor to kind of choose their own level, how much they want to do with it. Now, my firm provides all three in the course of setting up portfolios. Screening allows for alignment of values with financial goals. Shareholder advocacy encourages companies to become more responsible corporate citizens. And community investing allows the investors to directly benefit these at-risk communities. Now, SRI, where did it come from? Well, the early history goes back to biblical times. Jewish law gives many directives about how to invest money. The founder of Methodism, the Methodist Church, his name is John Wesley, in the mid-1700s, considered money to be the number 2 most important areas talked about in the New Testament. We all know what the number 1 one was, of course. Jesus. In fact, when the Methodist and Quaker immigrants came to this country, they brought these concepts to the New World. They basically brought SRI to our country. Methodists do not condone investing in slavery or war. Methodists have been employing social screens for over 200 years. Now, a couple of real-world examples. I happen to be Methodist here at the Red Bank Methodist Church, and I have a number of clients who are retired ministers. Well, those ministers have the benefit of their pensions being managed by the Methodist Board of Pensions, which is one of the most respected and effective pension board managers out there. Some of the highest performance of all pensions, period. Strictly SRI. Strictly SRI. The other example is our church has adopted socially responsible investment guidelines on the local level at the church. At my urging, it took a little work, but they've done it. And at this point, there's 2 endowment accounts. I manage one in an SRI portfolio. So it is being done on a local level. Some of the more modern roots for SRI, well, it traces back to the hippies of the 60s, so to speak. Back then, that was about 4 to maybe 6% of our population. Grew out of concerns, escalating sensitivity to social responsibility areas such as the Vietnam War was a big area, civil rights, women's equality, they're the major examples. Now this broadened in the 70s. Started to include labor and management issues and anti-nuclear convictions. That's when the whole anti-nuke thing really started growing. It grew dramatically in the 1980s. Millions of people, plus churches, universities, cities, and schools, basically used investment strategies to pressure the white government of South Africa to dismantle apartheid. A lot of people don't realize that apartheid was dismantled due to economic pressure. And that economic pressure was founded or started over here by the SRI grassroots activists. Now there's other kind of galvanizing incidents in the 80s, such as Bhopal, Chernobyl, Exxon Valdez, the ship that ran aground. This, coupled with new information about ozone depletion, climate change, basically brought these concerns to the forefront of social investors. Now, some more recent rallying points include climate change, school shootings, things like that, human rights issues, healthy working conditions for factories, sweatshops, that kind of thing.